New York, Reuters. The S&P 500 paired early losses on Tuesday after a Trump administration official said he hoped to further open China-Euro trademark's economy to U.S. companies, though manufacturing data stoked concerns of rising costs that could cut corporate profits. U.S. stocks came off the Euro trademark's lows after U.S. Trade Representative Robert Lighthizer said he did not desire to change China-Euro trademark's economic system but wanted to limit the damage it causes to the United States and encourage more foreign competition. The Dow Jones Industrial Average fell 179.55 points, or 0.74%, to 23,983.6. The S&P 500 lost 5.41 points, or 0.20%, to 2,642.64, and the Nasdaq Composite added 32.66 points, or 0.46%, to 7,098.93. Earlier on Tuesday, U.S. Commerce Secretary Wilbur Ross said the Trump administration was prepared to levy tariffs on China if an American delegation heading to Beijing did not reach a settlement on trade imbalances. The news came after President Donald Trump on Monday extended a temporary exemption from metal tariffs for the European Union, Canada, and Mexico to June 1, just hours before the tariffs were due to come into effect. Data from the Institute for Supply Management indicated a jump in raw material costs for U.S. companies, in part due to the tariffs on steel and aluminum imports imposed by the Trump administration. It also showed that U.S. factory activity slowed for a second straight month in April. While first-quarter corporate profits are expected to have notched their best growth in 7 years, largely due to lower taxes, investors have focused on cost warnings from companies. Red flags are everywhere, said Jim Awad, Senior Managing Director of Heartland & Co. in New York. We Euro trademark finally getting the inflation that to date has been so elusive. The energy sector fell 1.1% on the back of a more than 1% drop in crude oil prices as the dollar remained near a 4-month high. Still, oil prices remain near their highest levels since 2014. O/R. Shares of Pfizer Inc. fell 4.4%, the greatest percentage decline on the Dow, after posting its biggest miss on quarterly revenue in a year as demand for its key drugs fell short of estimates. Technology was the biggest gainer among the S&P Euro trademark's major sectors, up 1.0% as Apple Inc. shares rose 2.1% ahead of its quarterly report after the bell. Shares of Match Group Inc., the owner of dating app Tinder, and IAC/Interactive Corp., Match a Euro trademark's parent company, dropped after Facebook Inc. announced that it would add dating features to its flagship social network. Match shares tumbled 22.9% while IAC shares sank 15.9%. Declining issues outnumbered advancing ones on the NYSE by a 1.28-to-1 ratio, on Nasdaq, a 1.01-to-1 ratio favored decliners. The S&P 500 posted 4 new 52-week highs and 29 new lows, the Nasdaq Composite recorded 31 new highs and 70 new lows.